From the world of politics to the world of business, this is Balance of Power with David Weston.
From Bloomberg World Headquarters in New York to our television and radio audiences worldwide, welcome to Balance of Power. Well, for anyone who's been watching or listening to Bloomberg today, you know it's a big bank earnings day with 4 major banks reporting. One of the reasons we were all curious about this was not only what they did last quarter, but also what the leadership had to tell us about what is coming up in the economy. For a report on what we learned today, we welcome now the woman who reports on all the financials from all around the world for us every single day. She is Sheila Bar. So welcome. You've had a long day already, Sheila. Thank you for being here. What did we learn about what the banks think about the economy?
The day has gotten better as it's gone along. You saw the banks sinking upon the market open, and it's because there are worries about the economy. You have JP Morgan and Citigroup guiding for a mild recession at the end of this year, and what you're seeing in preparation for that is provisions for loan losses led by reserve builds at these banks. So they are losing more money tied to the consumer, cracks to the consumer starting to really show. That is also shown in the charge-offs. But part of this, the banks have guided, is because they are trying to lend more into this higher interest rate environment. There are also cracks, I would say, when you look at the corporate lending books as well. Think about that steep drop-off you saw in debt underwriting. And for Citigroup in particular, they had guided that some of those costs actually are tied to higher premiums behind credit default swaps. So a little bit worries they're building behind the strength of big businesses as well as the strength of the consumer.
So there's concern there about the economy and the consumers for listening to you. Are they taking less risk? Are they indicating they're going to really retrench a little bit?
So they're not. And I think that's the positive signal here because you still want to see banks lending into this economy. JP Morgan, the disappointing news at the day's start was the idea that net interest income would come in lower than expectations. But part of that would be because deposit rates are also expected to finally start to rise. You're getting 0.01% mostly at JP Morgan and Bank of America. So once that starts happening, you're going to start to see things start to normalize. And even for the charge-offs, you'll start to see them come off of historical lows. But I think the point that everyone here is trying to make is that this is not the great financial crisis, but it will be a tougher environment ahead with a lot of uncertainty still toward the end of the year.
Shania, thanks for all the great reporting throughout the day on the banks. Really appreciate it. So that's the view of the banks on the economy. We talked earlier today with Wall Street Week contributor Larry Summers of Harvard. Asked him whether, in fact, we're seeing a brighter economic picture overall, particularly with those CPI numbers. This is part of what Larry had to say.
One has to be careful of false dawns. And if you think about it, the good news was inflation running in the sixes, and that's still inconceivably high by the standards of 2 or 3 years ago. So I would stick with my view that a recession this year is more likely than not.
So that's the view of Larry Summers of Harvard. Now let's go to really the source, one of the people who's actually got his fingers on the levers of the economy. He's Brian Deese, director of the President's National Economic Council. Brian, thank you so much for coming to us from the White House today. So I guess one way to put it is, are we seeing a light at the end of the tunnel, do you think, on the economy, or is it a false dawn, as Larry at least warned it might be?
Well, look, we should be careful. This is an uncertain moment, and so we should be careful about being too definitive in any moment. I would say that the data in last month's CPI report and the data overall is encouraging and should give us more confidence that we can navigate through this period and bring prices down, transition to a more steady and stable growth path without giving up all the economic gains that we've made. Look, if you look over the last 6 months, we've seen core inflation come down from about 8% annualized on a 3-month basis to about 3% in the fourth quarter on an annualized basis. That's significant. That's encouraging, and we've seen it in the context of ongoing resilience in the labor market. So I think we're seeing the kind of progress we want to see, and now we've got to keep at this. I would say underscore that, at least from our perspective, what it underscores is the policies that we have been pushing forward over the last 6 months are helping. They're helping this transition unfold, and so we're going to redouble our efforts in 2023 to focus on bringing prices down in areas like healthcare and energy, and helping to provide incentives to keep this capital investment going and build out productivity-enhancing investments in areas like innovation, semiconductors, clean energy as well.
Brian, throughout this period, you have been very careful to keep open the possibility of the so-called soft landing. I never heard you guarantee it, but you said don't rule it out. It could happen. Is your expectation or your hope going up about a soft landing right now?
Well, I think that the recent data should give us all more confidence that we can navigate through this transition in a way that gets us to that outcome. We have come out, and that outcome is this historically strong economic recovery, getting us back to a more stable and steady growth path. And the data underscores it. You know, we have seen inflation moderate with resilience in the labor market. That is the kind of thing we want to see more of. And, you know, you were talking about the bank earnings. We have also seen resilience in the consumer, the household balance sheet. Certainly people are paying attention to moves in the short term, but if you step back a bit, credit card delinquencies, personal credit card delinquencies today still remain 20% below pre-pandemic levels. And so the American consumer maintains resilience, and part of that is that over the last 6 months, real wages have increased. And that's not because nominal wages have increased. Nominal wages have moderated, but because inflation has come down, real wages have increased as well. So we're seeing the progress that we want to make happen. Nobody should take anything for granted. We have a long way to go. We're going to keep our head down and focus on those policy levers, as I said, that can make a difference and that really a number of them will just start to kick in the first half of 2023.
So certainly some encouraging indications, but something crossed the Bloomberg, even as we've been speaking, that goes the other way. Something that will not be a surprise to you, Brian. We all sort of knew it was coming, but it's now happened. The Secretary of Treasury, Janet Yellen, has said that the Treasury will use extraordinary measures on the debt limit. We know what that is, I think, which is, I'll put it in my terms, at least, we're going to have to hoard some cash because we're going to run up against that debt ceiling. It's not happening yet. They're talking about it in July. Give us a sense of how cataclysmic it could be if, in fact, we stepped over it.
Well, I appreciate you'll use those as your terms. Those aren't the words that I would use. But look, if this is you have it exactly right. This is very simple. This is not about new spending. This is not about new investment. This is about the United States government honoring the obligations that prior Congresses have already made. It's a sacred obligation, the full faith and credit of the United States. And Congress is going to have to deal with the debt limit and do so without conditions, without games, and without putting our economy at risk. Look, that's something that has happened multiple times under different presidencies and different parties controlling Congress over the last several years. They're going to need to do that again because part of what we want to accomplish in 2023 is keep making progress, making progress on bringing healthcare costs down, bringing prescription drug costs down. But the last thing that we can afford is to violate the Hippocratic Oath by having a self-inflicted wound on the economy.
As you say, Brian, this is not about spending new money. This is money that's already been agreed to be spent, is being spent. But let's talk about possibly spending new money. You're not predicting recession. I'm not saying that you are. But you must be taking that into account as at least a possibility. As we hear, some of the banks are predicting that. What is your plan B when it comes to that? Do we have fiscal headroom left? Because historically, my understanding the playbook is if we turn into a recession, we look to fiscal stimulus. Do we have any leeway for that if that happens?
Well, number one, I think that the recent data should give us more confidence that we can actually make this transition effectively. We're doing it in real time. Number two, a number of the pieces of legislation that we enacted in 2022 are really going to start to kick in. So one of the important things for us is effective implementation, getting money on the ground to encourage greater investment in semiconductors, in clean energy manufacturing, as I mentioned, lowering prescription drug prices. Those are all things that our effective implementation can affect the real economy in 2023. And I would say beyond that, I think the Inflation Reduction Act last year gives us a good playbook. We can invest in ways that reduce prices in the economy, reduce costs for families, and reduce the deficit at the same time. We surely can do that, and there are areas like, for example, making childcare more inexpensive for middle-class families that would boost labor supply, help on the labor supply side, help get more people, more parents and women in the workforce, and we could do that sensibly while also reducing the deficit at the same time. So there's definitely policy playbooks for us to continue to make progress, continue to support this transition. We're going to have to work and see whether we can build the political coalition, whether Republican leaders are going to want to work with us on those kinds of things that have had bipartisan support in the past.
And finally, Brian, let me ask about a different sort of investment. We had, obviously, the big problem with the FAA this week. I'm not sure that we still know exactly what happened, but it raises questions about some of the systems that we're using in the government. There have been other questions raised, for example, the IRS. Perhaps we have underinvested. We're behind the game here, essentially, in those systems. Do we have the money? Can we find it in the budget, given all the concerns about the deficit? Can we find money to invest in some of those basic workings of the U.S. government to make it work effectively?
Yeah, look, this isn't a perhaps. It was unambiguous that over the last decade we have serially underinvested in core systems and processes that have an enormous return for the American people in terms of safety and economic activity. And to your question of whether we can afford it, the irony is that these types of investments are exactly the ones that pay for themselves many times over. You take the investments in the IRS, building the kinds of systems to allow the IRS to make sure that people, particularly wealthy Americans, actually pay the taxes that they owe, has an enormous return. We end up reducing the deficit by generating significant revenue for every individual dollar that we invest in those programs. Similar is true in something like the FAA system. Our nation, our economy, the safety of air travel are incredible value to the economy. And so these are high bang for the buck investments. We've done too little of it in the past. The good news is that in important areas like the IRS, we finally have done that and are making progress. It would be a mistake to go backward, but there are other areas where we do need to move forward. The FAA is one of them.
One last one, maybe the hardest one of all, Brian. Is there any prospect of getting Washington to understand the difference between a capital investment and an expense? Because I've never heard that distinction made. You'd go out of business if you were a business and not understand the difference for the reason you described. Capital investments are made to actually return more productivity down the road.
Look, there's been a long debate in Washington and budgeting around doing a capital budget and an operating budget for the federal government. I think in practice, the answer is I'll end on an optimistic note. If you look at the IRS investment, the Congressional Budget Office, who is the sort of independent scorekeeper of these things, has actually confirmed and said that because of the investment that we made in the IRS and that we passed through Congress last year, we will actually reduce the deficit by a significant margin. And that is, that's an example of what you are saying, which is we're starting to acknowledge in the way that we do federal budget accounting that these investments can actually have a broader impact. That's some distance from getting to a full understanding of capital budgeting in the federal budget process, but we'll take one step at a time.
Yeah, Brian, we'll always take an optimistic note from you. Don't misunderstand. Thank you so much to Brian Deese. He's director of the National Economic Council. Coming up, what went wrong with the FAA this week, and what should we do about it? We're going to talk with Republican Congressman from New York. He's Andrew Garbarino. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We started the week with the air traffic system basically frozen because of some problem at the FAA that we're still trying to sort out exactly what happened and what we can do about it. To help us understand what happened and what we can do about it, we welcome now Republican Congressman Andrew Garbarino of New York. So, Congressman, thank you so much for being here. One of the reasons I asked you this question is because you have been and may still be on the subcommittee of the Homeland Security Committee that really deals with cybersecurity and infrastructure protection. What do we know about what happened in the FAA?
Well, what we know so far is nothing has led us to believe that this was a cyber attack. We're still looking into it. But right now, the FAA has come out and said, and DOT has come out and said that what caused it to go down was a corrupted file. So it could have just been a lack of investment in this system, as well as what was really bad is they tried to do the backup system, and the corrupted file also infected that. So it really showed that there really hasn't been the proper investment in government systems like this one.
Did we know that before it happened, or is this a surprise?
Well, it was a surprise to us, but we just found out it wasn't a surprise to the FAA. Back in 2018, the NTSB actually told the FAA that they should update this, I quote, archaic system. And it looks like we're 5 years in 2023 now, and they still haven't. So I'm sure there's going to be some more questions that have to be answered, both from the FAA and the DOT, about why they did not follow this recommendation.
So, Congressman Garbarino, as I say, you were the once and perhaps future member of the Homeland Security Committee, but we do know that you're on the Financial Services Committee that's of great interest, of course, to all the Bloomberg audience. First of all, congratulations. That's an important committee to be on. What's your agenda as you join that committee? What would you like to get accomplished?
Well, yeah, thank you very much. I am very excited to be on the committee. It's a very important committee to New York. I represent Long Island. I have a lot of people a lot of constituents that live out here but work in the city in the financial services sector. But I'm very excited to be working with the incoming chairman, Patrick McHenry. He's been on that committee for a very long time, and he has a big agenda for us. Number one, I think, is going to be oversight of the Biden administration, specifically the SEC and CFPB. I think Chairman Gensler is going to have a permanent parking spot if it has anything, if we have anything to do with it, up at Capitol Hill. But also, we're going to look at capital growth, allowing businesses to get more access to capital. I think that's something that we'll be focusing on. Privacy modernization, online digital privacy, as well as crypto. Crypto is a big thing, and giving some clearance. A lot of states are passing laws directing different crypto rules, mining rules. I think we need to lead out of Washington, D.C., so there's one rule for the entire country.
So if I could, let me take those separately. Cryptocurrency we'll come back to. But first, what you talked about, the chairman of the SEC, he's Gary Gensler. That's oversight, as I understand it. Mr. Gensler came in with predicting an awful lot of regulations, I think many of which have not actually seen the light of day. They're in the process right now. Do you have an effective role at preventing him from doing some of the regulating that you would not like to see?
Absolutely. Well, first, there's going to be a lot of hearings. And if he comes out and we think he oversteps with certain regulations coming out of the SEC, Congress has the authority with a majority vote both in the House and the Senate to permanently override whether a sitting regulation or a regulation that he comes out with. But I do hope he knows that there will be deep review of everything that he tries to do, because we think both at the SEC and the CFPB, they're overstepping their authority in a lot of these regulations they're discussing. So there's going to be heavy oversight on our behalf, and Bill Huizenga from Michigan is going to be leading that subcommittee.
So apart from oversight, let's go to perhaps affirmative legislation and the crypto that you just referred to, because we talked to Sherrod Brown earlier this week, the Democrat who runs the banking committee over on the Senate side, and we've talked to Patrick McHenry, who will be this chair, is now, I guess, the chair of the Financial Services Committee. They both seem to want legislation. Is there potential for bipartisan support for some structure for regulating crypto in this Congress?
I believe so. I know, Patrick was working with Chairwoman Waters on this last year on some legislation. I believe they're going to continue to work on it. We are a split Congress, Republican House, Democratic Senate. We can't just do nothing for 2 years. So I think there is an appetite to get something done, because, like I said, a lot of states are starting to do their own regulations. That's not going to help anybody. Crypto was good innovation. We just need to make sure that there's protections and good regulations there to let people know what the rules are and what they aren't.
Well, let me ask you about that, the good innovation you referred to in the crypto, because some people, including Sherrod Brown, the senator from Ohio, is raising questions about exactly what the use case is. What is it? Is it a store of value? Is it a method of exchange? What is it? Other than something I'll use the term, sort of gamble on.
Well, I think it's going to be around for a while. I don't think crypto is going to end, so it's something that we're going to have to deal with. And what it actually is, whether it gets turned into a stable coin, whether we start using it on the national level here, whether there's going to be a crypto currency out of the Fed, it's something that we're going to have to work towards. I don't have the answer for that right now, but I don't think it's going away anytime soon. It's something that we have to work with them and we have to deal with. And if we don't regulate it here, a lot of these companies are going to go to other countries that are more welcoming, and I don't think that's going to be very good for us either. So I think it's a smart move, working together and coming up with some sort of regulation and laws that these guys can abide by.
Let me close, if I could, Congressman, on a broader issue, and that's the debt ceiling. While we've been on the air, actually, Secretary Yellen from the Treasury Department has said that they're implementing extraordinary measures to try to conserve some of the cash because they're running up against the debt ceiling. People are saying it may be sometime in the summer. We've heard a lot of talk out of particularly Republicans in the House, but a lot of people who watch and listen to Bloomberg are very concerned about this issue. It could really affect financial markets a lot. Is there a serious prospect that we would default on our debt?
I don't think there's an appetite in the Republican conference to allow us to default on our debt. I know some people some of my colleagues have suggested that if they don't see some certain things, they wouldn't vote for a debt ceiling increase. As of now, I don't think that is something majority of the conference is willing to do, which is why Speaker McCarthy's already reached out to President Biden and his team and said, let's sit down and start having negotiations now. The Speaker has said, I'm not just going to do a blank check debt ceiling increase, but he is willing to entertain one, with other discussions. So I think that if the quicker they start those conversations, the better.
Yeah, I think everyone would agree with that. That sounds right to me. Thank you so much. We really appreciate it. And once again, congratulations on your appointment to the Financial Services Committee. That's Republican Congressman Andrew Garbarino of New York. Still to come, we're going to talk about the state of the banks with Sheila Bar of the Center for Financial Stability. That's coming up on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Well, perhaps the biggest news for Bloomberg followers today has been, of course, those four major banks with their earnings. The question is, what did that do to the markets, if anything? To explain that to us, we turn now to Kriti Gupta. So, Kriti, what did it do?
Well, it's all coming down to the macroeconomic picture, which is ultimately that the Federal Reserve is looking to hike in 2 weeks by what the market thinks is only going to be 25 basis points. Now, that's trickling into not just the market reaction you're seeing today, but of course the bank sector specifically, because the banks have had some pretty record profits in the last year, specifically led by their trading division. That's kind of almost offset the pain you've seen in investment banking and deals, and of course their wealth management businesses as well, which are far more exposed to kind of the slowdown that you're seeing. Nevertheless, this time around, and this is what makes it so much worse, the trading activity is slowing down as well and missing. And that just simply makes it a function of the volatility that you're seeing actually coming back down. As inflation comes back down, as it decelerates, as the Federal Reserve starts to really stick to their messaging, that volatility goes down as well, which is going to start impacting the trading profits, in addition to the slowdown you're already seeing on their consumer businesses, on their investment banking businesses, and then, of course, their lending businesses as well.
So let's go all the way from the banks over to the auto sector, or maybe the tech sector. I'm not sure which it is. And Tesla. Are you going to find a Tesla in the bargain bin these days?
It almost feels like it, and it's the same story at the end of the day. They're worried about that macroeconomic risk, so they're trying to target more and more people when it comes to whether or not their Teslas are actually going to sell. So today, I think the big news that's really getting kind of overshadowed by some of the banks is this Tesla share move. It's down about 2% right now, but it was down as much as 6% in the pre-market, and it really speaks to the idea that they are now cutting some of their model prices by 20%. Imagine getting a $21,000 reduction on a Tesla car, and it's really to say, look, here not only is it cheaper price, but in addition, it now qualifies for a federal tax credit.
Wow, quite a story. Thank you so much, Kriti. Always great to talk to you. You can catch Kriti again anchoring at 1 p.m. Eastern Time on Bloomberg Markets. Coming up, banks warned about possible weakening in the economy in their earnings reports today. We'll talk about the state of the banks and also the state of the economy with Sheila Bar, who chaired the FDIC during the great financial crisis. This is Balance of Power on Bloomberg Television and on Bloomberg Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We want to keep you up to date with news from all around the world. And for that, we turn to Lisa Mateo, who is here with the first word.
Thank you, David. Russia's defense ministry says its forces have captured the salt mining town Soledar in eastern Ukraine after weeks of intense fighting, even as Kyiv said its troops were still engaged in a battle there. It would be the first victory for Kremlin troops in months. Meanwhile, Ukraine says it has repelled Russian attacks near 17 settlements in the east over the past 24 hours. The two Trump companies found guilty of tax fraud last month have been sentenced to pay more than $1.6 million. Now, that small sum is because of limits under New York state law, but more fallout could be ahead. Legal experts say the real punishment could be the potential long-term blowback to the former president's business, going beyond reputational damage to freezing it out of coveted deals, bank loans, and government contracts. And a deadly storm system spawned tornadoes across parts of the southern U.S. overnight, killing at least 8 people and causing substantial damage in the historic city of Selma, Alabama. One tornado cut a 20-mile-long path across 2 rural Alabama communities before the worst of the weather moved across Georgia on a track south of Atlanta. The National Weather Service said tornadoes touched down in nearly 20 counties. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg. David.
Thank you so much, Lisa. Well, the big news, of course, we've been covering throughout the program has been the bank earnings that we had. 4 major center banks came out with their earnings just today, and they reported actually some concerns about the future of the economy. At the same time, they have very robust sales and profits. We turned out to somebody who has regulated these banks, has insured them, and she is Sheila Bar. She's now at the Center for Financial Stability. She's a senior fellow there. She, of course, was the FDIC chair during much of the dark days of 2008, 2009. Sheila, thanks so much for being back with us. Strikes me, looking at this, putting myself in your shoes, boy, it looks a lot different from what you must have been seeing back in 2008.
No kidding. Yeah, so the banks, knock on wood, are holding up well. They've got good, the ones with deposit franchises have good liquidity, much stronger capital levels. Taking deposits and making loans right now is a good business to be in for them. That's probably going to change next year. But so, yeah, they are strong. I think the big concern now is more in the non-bank sector, what kind of risks may be lurking there and how that non-bank sector might flow back into the regulated sector, depending on how some of these shadow banks are able to perform as the economic environment becomes more and more challenging.
Sheila, one of the concerns, of course, is what happens with the economy. We have at least a couple of those big banks predicting a recession toward the end of 2023. Are they in a position actually to lend more, to actually help support the economy if, in fact, that happens?
Well, they should be. Again, I think there's a new reserving methodology called CECL, so they're required to start reserving when a loan is made through this cycle. So that makes that they reserve more upfront, which makes them more resilient once the economy starts to deteriorate and they actually start realizing the losses. So yes, I know a lot of them don't like CECL, but I do think that a change in the accounting standards for loan loss reserves will help them be stable. And of course, they've just got a lot more capital now and strong deposit franchises. They'll probably have to start raising the interest they pay on their deposits. Good news for Main Street America to keep those deposits, but they'll still be lower cost than any other sources of funding.
If, in fact, there is a recession, and I don't think any of us knows for sure whether there is or not, is there a potential, and should it be used if there is a potential, to ease up on some of the regulations that were put into effect back in 2008, 2009, in order to really free up some more capital for the market?
Yeah, so there are buffers built into the capital standards now, and those can be eased to expand banks' balance sheet capacity if you get into a very difficult situation. Again, the non-bank sector has been such a huge component of source of credit since the great financial crisis, but that non-bank sector tends to shrink pretty quickly. It does not stay resilient in a recessionary environment. So we need those banks to stay healthy and strong. And yes, they are in a much better position to do that. And there's built-in flexibility into the capital rules right now.
You've mentioned the non-banks a couple of times here. And at least my understanding is there is some connection between that and some of the liquidity concerns that have been out there. For example, with respect to U.S. Treasuries, where the regulated banks have a tougher time, whereas a lot of the hedge funds and others can really do derivatives, including on Treasuries. Is that continuing to be a problem, the liquidity issue? We've seen it come up 2 or 3 times. I'm not sure it got fixed.
Yeah, it is. Yes, I still worry a lot about liquidity in the Treasury market. I think the bank narrative is they're overregulated and they don't have the flexibility to make markets in Treasuries. I think the problems are more fundamental than that. I mean, the main problem is there's just too much debt out there. Our government loves deficit financing, loves those 31 trillion in debt. Somebody's got to buy it. The market's got to absorb it. So that's part of the problem. The Fed has stepped in with its reverse repo facility that helps provide liquidity. But I think, shortening clearing and settlement times in the Treasury market, I think would be helpful. Centralized clearing, I think, would be helpful. But golly, Congress just needs to become a little more fiscally prudent and stop issuing so much debt, because that's the bottom line problem. There's just too much debt out there for the market to absorb.
I think a lot of people agree with that. At the same time, when you come up with solutions for the too much debt out there, I'm not sure how obvious it is. Even while we've been on the air here, Janet Yellen, the Secretary of Treasury, has come out and said they're going to have extraordinary measures to conserve cash because they're running up against the debt ceiling. We have some Republicans now in the Congress that saying, it's time to call the question. Essentially, we will take the risk and maybe even default in order to get our arms around the budget. Do they have a point?
Well, that's so a default is a really bad idea. So the debt limit, that just requires you to meet your current obligations, money that's already been committed and Congress spends a lot of money. And so really with the commitments of the government are already, that debt limit needs to be increased to make good on those commitments. Going forward, I'm with them. Let's get government spending under control. Let's get deficit finance spending under control. But forcing a default is going to make the problem worse. Then the funding costs for the government will really skyrocket because people will not trust the integrity of our debt anymore. I can't even believe that anybody would ever let that happen. It would be insanity. But again, the debt limit is to make good on obligations we've already committed to our government. If you want to curb deficit financing, curb spending to begin with. Stop authorizing so much money. That's the key, not triggering a default on our debt.
But Sheila, as I recall, you spent time on Capitol Hill, right, before the FDIC.
Right. Oh, yeah.
You know Washington really well. And I must say, debt reform feels like a unicorn in Washington at this point. Everybody talks about it all the time. I've never actually quite seen it. And my understanding, and believe me, I'm not suggesting we should default on the debt at all.
No, I know.
But in fairness, my understanding that what the Republicans who are taking this position are saying is, okay, I understand we've already spent that money, but in order to get us to stop spending money in the future, we may have to hold hostage what has been done in the past.
Well, I think there's probably room for negotiation over some agreement around spending curbs as part of the debt limit. But to the extent that the debt limit would be held hostage to that and you'd actually force a default, I mean, the problem with using it as a lever, it's a nuclear bomb. It's something you never want to use. It would hurt everybody. So as a bargaining tool, I get it. They're going to do that. They're going to have some discussions. Hopefully they're constructive. Hopefully we will get some curbs on spending. But again, I just don't think it's a credible threat because it would be Armageddon for not just the U.S. but the world financial system if we triggered a default on our debt.
Yeah, one last one, just to draw on your expertise in Washington. Is it necessary to take this debt and deficit issue to some extent outside the political process? That has been done, as I recall, years ago with Social Security, where they appointed a commission, right, to come in and you just voted up or down. I think they did it on base closing, military base closings a lot. Is there any move to try to do something like that? Because let's be frank, everybody wants to cut somebody else's spending. They don't want to cut their own.
That's right. Nobody wants responsibility. That's right. Well, I think it's an idea worth exploring. Yes, to kind of depoliticize this and take it out of the hands of people who might have a lot of different agendas and playing around with it. It's a very dangerous weapon to be playing around with. So yeah, some type of nonpartisan expert commission to make decisions on the debt limit. I think that's worthy of exploration. Whether that could get traction, I don't know. But the current system, we have to go through this drama periodically. And it makes the country look bad. I mean, foreign governments don't have this. We're the only one. I think we're unique, and they think we're nuts every time we always go to the edge of the precipice on this over and over again. It's just not the way to run a government. It really isn't.
Yeah, a form of American exceptionalism we'd rather do without. Thank you so much.
Yes.
Thanks so much to Sheila Bar. She's
Nice
Center for
David.
Financial Stability. She's senior fellow there, and she, of course, is the former FDIC chair. Coming up, we're going to talk with Justice Department veteran Donald Ayer about President Biden's brush with the law over confidential documents. That's coming up on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. A little less than 24 hours ago right now, we had the Attorney General of the United States, Merrick Garland, announced that he would appoint a special counsel to look into some of those confidential, even classified documents that were found, first in an office, then in a garage of President Biden, back when he acquired them, actually, when he was vice president. We welcome now somebody who's a real veteran of Washington and Washington legal circles. He's Donald Ayer. He's now at Georgetown as a visiting lecturer. He served as Deputy Attorney General under President George Herbert Walker Bush and as Principal Deputy Solicitor General under President Reagan. So, Donald, thank you so much for being back with us. Give us your reaction on this invocation of the special counsel law. Was it called for? Did Merrick Garland really have any other choice?
I think he did the right thing. I think that it's a discretionary call. The terms that are in the regulation talk about he can do this, make this appointment in extraordinary circumstances that make it in the public interest. Here, I think we clearly have extraordinary circumstances, and I think it's going to be far better for someone who is not in any way anyone could suspect a bias. Robert Hur, the appointee, is a former Trump-appointed U.S. attorney, among other things, a well-regarded, very experienced prosecutor. No one can reasonably say that he's going to be biased. So you want that decision to be made in that way. So I think that was clearly the right thing. On the other hand, there isn't any evidence at this point with regard to Biden that the elements of intent, of deliberate concealment, of resistance to efforts to get the documents back where they belong, are present. And so I think it's totally illogical to say, oh, well, they're just the same circumstance. From everything we can see right now, they seem not to be similar at all with regard to the element of criminality.
If that's comparing it with former President Trump, who apparently had resisted, at least through his lawyers, turning over documents, is one of the first orders of business for Mr. Hur, in your opinion, to find out if there are any more documents. Do we know it all yet?
Well, sure. I mean, I think he's going to want to know that. And then I think he's going to want to know all the circumstances that surround how it was that these documents ended up in these places that Biden, including his home, that Biden had access to. How did this happen? Who did it? It's entirely possible, we don't know, that Biden actually had nothing to do with this, that other people were moving boxes. We just don't know. And so he needs to get to the bottom of those facts. But the ultimate question for him is going to be, with regard to any conceivable criminality, do these elements of intent, of resistance to turning the documents back, of efforts to conceal, of that sort of thing that triggers the criminal aspect of this kind of behavior, are any of those things here? And so far, there's not any indication that they are. And so that's the critical difference that seems to be present right now.
Donald, we have a viewer actually writing a question I don't know the answer to. I don't know if you know the answer to it. We know with respect to the President of the United States, the President, as I understand, can declassify. It has to do something to do it. Can't just think about it, but it has to do something. Did the Vice President have the right to take classified documents off premises?
Oh, I think it depends under what circumstances and how it's done, and I think that's something that needs to be looked into. I'm not aware, frankly, of, you didn't ask the question, but whether the Vice President can declassify documents, I don't know. I don't think any of those assertions are being made here. I think we've really just got to get to the bottom of what occurred and try to understand who did what, why the documents were there, and then what are the circumstances under which they were returned. Everything I know suggests that they were spontaneously returned as soon as the Biden people became aware they were there, far from being concealed.
Let me ask you another question, because again, you know Washington so well on situations like this. For all intents and purposes, it looks like we're going to have the Republican-controlled House do an investigation into this question. We certainly have already heard from Speaker McCarthy on the subject. How does an investigation by a committee up on Capitol Hill interact with a special counsel investigation at the same time looking into many of the same things?
Well, I think that there's good law that indicates that Congress isn't allowed to interfere with an ongoing criminal investigation by the Department of Justice. Now, that doesn't mean that they can't conduct oversight of investigations that have gone on in the past. So I think the sequence here should be, and of course that doesn't mean that that's the approach that the Republican committee on the Hill is likely to take, but it means that what should go on here is the special counsel should proceed and figure out what, just as with President Trump's situation, proceed and figure out what ought to happen. And in hindsight, down the road, I think the House committee or any other committee that wants to do oversight on it could do that, but not while the investigation is going on. Can they interfere with that investigation?
One last one. Any of us who spend time in Washington have always heard, it's not the crime, it's the cover-up. And of course, we're not saying there even was a crime here. You're not saying that, certainly. But to what extent should the special counsel be looking into not just how the documents got there, but what happened after they were discovered, how they were discovered, and how it was revealed and when it was revealed? Because it was, unfortunately, right around the time of the midterms.
Oh, I think he needs to understand all those facts, and then he needs to think about what inferences, if any, they support with regard to any considerations relevant to any conceivable criminal conduct. And I think that, that's part of getting his brain around and his staff's brain around the process of what occurred here. They just need to understand what went on. And I think then you go from there and you ask the question, is there any conceivable basis for criminality? The key point is intent. The key point is whether a person here, Joe Biden, or conceivably someone else, did someone conceal? Did someone deliberately hide? Did someone make an effort to prevent these documents from getting back where they belong? Or is this just a situation where the documents found their way to a place and ultimately, as soon as anyone knew about it, they were returned? In which event, that's not a situation where normal practice would suggest a criminal prosecution is remotely appropriate.
Okay, Donald, it's always such a pleasure to have you with us and really helpful. That's former Deputy Attorney General Donald Ayer. Coming up, President Biden is entertaining Prime Minister Kishida of Japan at the White House today. We're going to take a peek at the agenda with Washington correspondent Joe Matthew. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It's a big day at the White House once again today as President Biden entertains the Japanese Prime Minister, Mr. Kishida. And he's going to go over some very substantial issues with him to tell us what he will be doing. We welcome now Washington correspondent Joe Matthew. He's host of Sound On, weekdays on Bloomberg Radio, 5 p.m. Eastern Time. Joe, thanks so much for being with us. So set the table here. What exactly does President Biden want to accomplish? For that matter, what does Prime Minister Kishida want to accomplish?
It all comes back to computer chips, like so many conversations we have, David. You have to go back to October to really understand the meaning of this visit and another one next week. That was in October when the administration moved to apply restrictions, if you might remember on this, to exporting advanced computer technology to China. The idea here was to squash China's efforts to develop its own semiconductor supply chain. Fast forward to today, and our TV viewers can see here President Biden hosting Japan's Prime Minister at the White House. Next week, we understand he will host the Prime Minister of the Netherlands to get Tokyo and The Hague on board with this effort. David, both countries are home to major chip equipment makers. Japan has Tokyo Electron. The Netherlands has ASML Holding. The other three are based here in the U.S. So imagine essentially a three-country blockade. Bloomberg is reporting that the two countries are on board, although we don't expect any major announcements today. And of course, China is never one to stay quiet during times like these. Beijing has filed a complaint with the World Trade Organization, and the Foreign Ministry out with a statement accusing the U.S. of being selfish and abusing export controls. But it doesn't appear that China will have much to say in the way this goes.
It's fascinating. As I understand, they also have larger security concerns. I know I heard Jake Sullivan say that they're going to modernize their mutual defense treaty to include space.
That is correct. And of course, Taiwan is going to be a major part of this conversation. And they all overlap, again, with computer chips. David, semiconductors have essentially become the currency of high tech. This is why we talk about the importance of onshoring, remembering the CHIP Act that was passed last year in an effort to create more of an industry, a domestic industry here in the U.S., so we are not completely reliant upon Taiwan. And we know how easy it would be for China to blockade Taiwan. So here we are again coming around to this. And I would remind you, David, that at the Three Amigos Summit just days ago, that was another major story on the table as President Biden spoke to collaborating with both Mexico and Canada to create new jobs as new foundries here are created, like the one that Intel is putting in Ohio, like another that Samsung is building in Arizona. This is a long-term conversation, and the administration's doing a pretty good job getting more allies on board.
Well, Joe, I want to draw a connection or a comparison between two things. One is the war in Ukraine, where there's been reluctance to give too much sophisticated weaponry. We're talking about the Leopard tanks, for example, coming out of Germany right now, because there's a concern about retaliation from Russia. Do you, from your reporting in Washington, hear any similar concerns about Chinese retaliation on semiconductors? As you say, in some ways, semiconductors are more important than anything right now.
Well, that's a good point. And I think after we saw Nancy Pelosi's visit to Taiwan, there was a realization here in Washington that, boy, this is actually, this could be a more of a fast-moving affair than we realized, because China went out of its way to prove that it could, in fact, create a blockade, that it could encircle Taiwan and make that industry essentially held hostage. So the U.S. needs to get this done here today, domestically. We'll be hearing more about it next week with the Netherlands visit, David.
And we'll be hearing more about it at 5 p.m. Eastern Time on Sound On, which will be hosted, of course, by Joe Matthew, our Washington correspondent. Thank you so much, Joe, for being being with us. Check out the Balance of Power newsletter on the terminal and online. Coming up, Balance of Power continues on Bloomberg Radio. In our second hour, we're talking with Republican strategist John Hart about the Republican Congress. This is Balance of Power on Bloomberg.